Okay, so let's talk about trend lines now. Trend lines are tools used to connect the highs and the lows, and we just go on the chart and identify the highs and the lows. Now we're going to use trend lines to connect them. This connection of highs and lows gives the trader a good idea of the direction of the trend and also key resistance and support levels in the market. They show direction and volatility and reveal patterns during periods of price consolidation. Most analysts use the body of the candle to draw trend lines, but it is more accurate to use the wicks of the highs and the lows closed candles to draw these trend lines to identify the patterns being formed. Okay, so now that we're on the chart again, and we're going to discuss the trend lines. Now we know what a support level is and a resistance level, but we're going to go through them again because this is a very important thing in drawing trend lines. Now we know resistance level is where price reacts to, and whenever price reacts to a key level, we know that, as you can see, the wick show where the price had been, but it doesn't close at that price level. So the body of the candle is between the opening price and the closing price. We use the horizontal ray tool to mark this high here. We see that price come again, it went above and closed below. So this is showing that a lot of sellers are here. What price does in the past, it normally does again in the future, and we can see that here, price reacting to key levels here. So we have a resistance level here coming down to this support. We're going to mark that with the horizontal ray tool. And again, what price done in the past, it will do again in the what? In the future. So we have the support level here. Price went off it, hit the resistance level, came back down, hit the support again. It came up, find a new resistance level. We're going to mark that level there. New resistance level. And what price does in the past, it will do again in the what? In the future, we'll see that again. Price come down, form a new support level. This is a minor support, by the way, because of course this is a major support level, so we don't normally mark and focus on this level. So we see price come all the way to this. It didn't quite hit this resistance level, it made a new one. And what price does in the past, it will try again in the future. Rejection again, come down to this major support level. Now we're gonna focus on connecting the highs and the lows after discussing all of that. So we're gonna focus on connecting the highs and the lows, which will lead to our next chapter talking about chart patterns, and we're gonna see what will happen when we connect the highs and we connect the lows. So we have a low here. We're gonna connect them together, and notice we're using the wick of the candle. Yes, we're using the wick. So from here to here, we see that is a support level. When you have 2 points, that is when you draw a trend line. You only need 2 points to draw a trend line. Once you have 2 points, that is enough to draw a trend line. And we use, when price is approaching it a third time, that's what we use for entry or look for some form of reaction to make a trade. Now we're going to do the same thing for the wicks at the top, which is the resistance level, right? Okay, so we see that. Let's draw that more properly. Connect them on the wick. Good. So we have price come to this support level, find this new resistance. Come to this support level, we draw a trend line. Come to this resistance, we draw a trend line. Now we have these 2 points, so we don't know what is happening after here, right? Because we have 2 points here, 2 points here. Let's imagine price after this region does not exist. What do we see price do? Come, hit that level again, come down to this support, new support, and what happens when it reaches this major resistance or support level? It breaks through it impulsively, and we're going to talk about that a lot in chart patterns. Now it hit the support level, broke it, and whenever support is broken, it becomes resistance. Take that, note that whenever support is broken, it becomes resistance. So the support level, which should push price in a bullish direction. When it's broken, guess what it does? It's push price in a bearish direction, and that is what we see. You can see the candlestick wick hit that level. Let's zoom into that. Note the candlestick level. Let's draw it more accurately. By the way, it's at the wick, right? So at the wick, we see price come and hit that resistance level, push price down, and when price was pushed down, what it found new support. And this is what we're talking about. Again, we're going to show what we do when we connect the lows. So we see this is an uptrend, lows and lows being connected, and we're going to connect the highs now. So highs and highs being connected. So we're going to connect these two highs. And this is a pattern as well. We're going to discuss that in the next chapter. This is a pattern as well. We're going to discuss that in the next chapter. So again, human behavior and human emotion is reflected on the chart. We spoke about that in the candlestick chapter, and then we're seeing that even though human behavior is being reflected, human behavior acts in a pattern, and the trend lines are used to help to reveal that pattern, and that is what we trade. So we have price come, right, found a high, and if we were to use this horizontal array tool to mark this high at the wick, we can see that price never broke and closed above this line. It went above several times, but it never closed above. What's that saying? That a lot of bears are there. Push price through this support level. When support is broken, it becomes what? It becomes resistance. Let's zoom into that. When resistance is when support is broken, this support line here, when this support is broken, it becomes resistance. Resistance is retested, push price down, and you can see price coming a downtrend. And what did we say earlier about the price? Let's mark that low. Mark that low here. What price does in the past, it will try again in the future. Try to break that level, didn't quite close below, came back up. So this is the essence of technical analysis. This is one of the things that we're going to discuss in the next chapter. And theory is what I want to focus on phase 1. So majority of what is going to be discussed in the next chapter is theory, and then after the course is finished, all the videos on the channel will focus on being on the charts and explaining everything that we discuss in the theoretical section. So thank you for watching, and if you're new, subscribe, more content to come.